I'm trying to live until I die. Come connect, you know it's a lewd state of mind. Yeah, yeah. Talking traveling, if you wanna fly. Fitness and finance, living a better life. Keep it raw, no filter. Living with no limit. Thank you for tuning in. Come on, let's get it.
Gentlemen, welcome to Lewd State of Mind. Thank you for coming and sitting down with me today. And our listeners and our viewers.
G'day.
Can you introduce yourselves, please?
Far away, Nick.
I'll start off. My name's Nick. I've been in the industry of finance and brokering for the last 9 years. I started off working with CBA, then heading into brokerage about 5 years after that, and been in the industry about 4. I've been working with Ted for the last 4 years, just helping assist, mainly as a mortgage assister, mortgage analyst with Ted.
So you're the man behind the man.
Yes, he does all the hard work. Yeah, my name's Ted. I've got a broking business, been in the industry about 20 years and about 10 years with RateOne.
RateOne. You guys are fairly large. You're big players in the industry, is that correct?
Yeah, a little bigger than the standard. Like the general is the one-man band, so we've got a team, a lot of support, and these days it requires it. A lot of compliance and paperwork.
I'm one of your clients. I honestly thought that you were just a mom and pop operation, and I feel bad about that because I've done the research on your company. Let's have a look at. I'm going to get something off your website. So, Ted is you've won numerous awards and gained recognition from our top lenders as a consistent high performer, with over 350 million in settled home loans. Ted's vast knowledge, experience, commitment, and understanding in the industry allows him to provide his clients with very specific individual advice. Ted always puts his clients' best interests first, which is the key reason to his continuing success. How good's that? I've got sitting opposite me the best of the best in the business. So, my question to you is, what the hell is going on at the moment? 7 rate rises in 7 months. Please explain.
Yeah, there's a lot going on, and it's making news. It's in the media. A little bit of panic. I'll hopefully show you a brochure, a slide later that maybe puts a bit more into context. That people shouldn't be panicking, but you've got to be aware of what's going on, and borrowing within your means.
Well, that's the first thing, isn't it? Is don't extend yourself, especially when you're in a situation where interest rates are going to rise. So if you're talking to a client about their borrowing power, they've got X amount that they can borrow comfortably. What sort of a buffer do you say they require on their borrowing to allow for interest rate hikes?
Well, the banks in their calculators, when they work out what you can borrow, they have quite a few buffers. So generally that's a good start, is what the banks will lend you. The things have changed since the Royal Commission that there's a lot more oversight on that from ASIC and people above the bank, so it's not just to sell and push money out. So they're a bit more wary now, and it varies between the banks how they view that, but that's your starting point. And then there's little things people can do to increase their capacity or improve their financial position, but that's your starting point.
Yeah. And as mortgage brokers, you're the conduit between the client and the lenders. So you've got to have a good relationship with the people that you're borrowing off.
Yeah, definitely.
The banks?
Yeah, I mean, effectively business partners, but brokers now doing 70% of brokers loans in the country. So more people are seeing us than the banks, and the banks are starting to see that and sort of pushing this part of the industry as the norm, especially on the residential side.
So do banks want customers coming directly to them for mortgages?
I think in the past they really pushed that, but these days they know that we can provide a better service, a more personal service, and from them now it's their greatest revenue too is from the broking side, third party. And
it's just easy, isn't it? It's easy for them. It's easy for you. It's easy for us.
For the clients, yeah.
The clients.
Correct.
It is very, very painless. The experiences I've had with you guys at RateOne have just been it's just been exemplary, unbelievable. If you need something, you phone or email. We've never met until today because we've only talked over the phone and via email. Yeah. As I said, you guys did a fantastic job. So if we talk a little bit more about what's happening in the market at the moment, and especially around Inflation. Now, can you explain to me, or explain to our listeners and our viewers, what's happening? What causes inflation, and what's causing the amount of inflation right now?
Do you want to go this one, Nick?
You want to have a go, Nick? Come on,
An
Nick.
easy one.
Yeah, very easy question. I think a lot had to do with COVID. With COVID coming in and the banks changing a lot, with the interest rates coming down a little bit, it created the value of money to become very cheap. So everyone had a lot of money during that time, and everyone was spending. And it's a inflation from my is the balance between supply and demand.
Yes.
So
Yep.
if you've got high demand, low supply, then things get more expensive generally. So it came to a point of time during COVID when the government was giving out money left, right, and center, and everyone had a lot of money to be able to use. They weren't public transport, they weren't going out, they couldn't do anything. So they had a lot of money, and things became just a little bit more expensive. But I think on top of that, it was things to do with the war. A lot of the resources that couldn't get into Australia or couldn't get imported and exported, that played a big part. I heard somewhere where a lot of the resources that we have in Australia get sold off overshore, and then they get buy back just for a cheap for a price because it's cheaper to kind of put it together. I think that comes to oil and things like that.
Yeah.
So when things happen during the world economy where things were exporting out, and then they realized they didn't have enough resources here, they had to buy things back, and that just put a lot of pressure on everything.
And then you've got that supply chain issues.
Correct.
I mean, freight, the
Correct.
shipping costs.
Yep.
So it all just compounded.
Yep. Delays,
Yeah.
huge delays.
The
and-
microchip
Correct. Yeah.
issues that they had.
That's right.
So yeah, it's been a series of small events that have just accumulated.
That's right. Yeah.
So if we go back to interest rates, 7 rate rises in 7 months. 9 months ago, could you guys see this happening?
No. And then even the Reserve Bank was putting out different messages. So I think that's caught a few people out.
Did the Reserve Bank actually know what they were talking about? Isn't there some conjecture about whether they actually know what they're doing?
I think about they're like a lot of us. They're forecasting and not knowing the full facts, and they can't predict the future. So things have happened that they wouldn't predict it. So yeah, we're feeling that now.
So how do we sit globally? How does Australia sit globally with regards to inflation and interest rates?
I think it sits pretty similar to most places that they're all struggling to try contain it, and they're also trying to work out how to. And no one's really sure. I think even through like COVID's the same, that they didn't know how to. Different people try different things, so I think they're still experimenting, and some are doing better than others. But
So the only way to fix it is interest rates?
there's a lot of talk about that now. That they're saying maybe it's not the only way, and they're saying it's not working overseas. So I'm sure they're looking at a lot of different things, but initially they're pushing rates, and that's it's been their lever in the past, and they'll probably use it, or they have been using it, and probably continue till something's proven to be better.
So it's basically just stopping people spending.
Well,
That's
One part of
ultimately
it,
what they
yeah,
want
major part of
to
it.
happen.
yeah, it's pretty blunt, but it's working to a degree. But I think again, the last couple of years, it's been different times. So
Well, nobody predicted that. Nobody could ever sit and go, that's going to happen in a couple of years.
But I think, for your couple of years where you couldn't spend your money, that even though you got these thoughts about inflation and interest rates rising, you still think, well, I want to enjoy myself.
Yeah.
So I think there's still a bit of that. That's probably slowing down. And the more they go up, the more people can't do that. But there's an element of that, I think, as well.
That's the one thing COVID did, was make people take stock of where exactly they are
Yeah.
in their life, in this world. And they made decisions about what they wanted to spend their money on and
Where
how
they want to live.
Exactly. What sort of boat they wanted to buy. It's like, I'm going to buy that boat because if the world's going to turn to shit in a handbag or turn to hell in a handbag, I'm going to be out fishing and I'm going to be fine. I'm going to be fine. So, strange times. How did you guys go through that period?
Oh, we've been flat out right from the start. There was, I think, maybe a few weeks of uncertainty.
Yep.
What's going to happen? But the phones rang. For us as brokers, we got a lot of clients. We're often the first people to get a call, and it would have been people in the same situation, business owners that didn't know what was going to happen and want to prepare themselves. So we got a lot of calls. There was a bit of the banks giving relief, putting people on hold, but we were the ones we were almost like a front line, taking those calls. So initially it was uncertainty, but how long's it been? 3 years.
Yeah.
We've been flat out the whole time.
Yeah.
I think when they started announcing the government schemes, that really drove
The
all the
government,
inquiries.
which ones?
The main one was the first home buyers, the home buyer schemes.
Yep.
During that started
Explain,
during COVID.
just because I'm unaware. Explain, because we'll get to first home buyers, but just explain to me how those schemes worked.
So there's a few schemes that come to play, and every year over the last 3 years they've introduced new schemes. the very beginning of this, they introduced the first scheme, which was the 5% deposit, where the government will when you're first home buyer and you buy a property up to a certain amount, you can get a loan of up to 95%. Generally, when you get a loan above 80%, you've got to pay lender's mortgage insurance, which is just an insurance that it has nothing to do with you, but it's really the bank taking the insurance if you go above that amount, or they lose out money when they have to repossess your house. They can claim on that insurance, so they claim that money back.
Yep.
So during COVID, when they introduced the first home loan deposit scheme, when they allowed first home buyers to buy up to that 95%, and the government will guarantee the lender's mortgage insurance. So effectively, they can buy properties up to 95% as first home buyers.
And they didn't have to pay the mortgage.
Correct.
Yeah, it was a risk premium that was covered by the government if it was called on. And it was about driving confidence back to the market. And a lot of the government incentives, not even just the mortgages, but in general, were around driving confidence, kept people spending money.
Yeah. Going back to the start of COVID, when everybody's a little bit unsure as to what's going on, was there a point where you guys looked at each other and said, we might be in the shit here? Or there was no doubt as to your business, and I mean, it's going to take something pretty dramatic to cut you guys off at the knees in your industry, isn't it?
Well, because we're doing 70% now, we're a major player in I guess, dispersing and helping people. But like I said, there was a bit of time right at the start, but I think just being so busy, you didn't really have a lot of time to think. You were just some of it wasn't income generating, but in general, if we provide a good service, good advice, look after your customers, and care, you're pretty okay.
So just going back to an initial dealing with a new client, you go through the process, you get the funds loaned, you sign off everything, you settle, and then you move on to the next one. What's the further interactions you're going to have with that client, and why? Technically, they've got a loan. It's a 35-year loan. They should set and forget.
Technically.
Yeah.
The reality is the life of a loan is generally about 3 to 4 years. And people think, well, not going to pay it off in that time, but something happens, needing more money, buying or selling, doing something else. But lately it's around a lot of repricing or just reviewing, because the banks have been super aggressive for new business over the last 6 months. You hear about rate rises. I've been talking to clients about the last 6 months about banks have been dropping rates for the last 6 months and no one's noticing it.
Dropping rates?
Yeah, indirectly. So if rates hadn't gone up by the government, rates are about 0.5% lower than they were 6 months ago. So
really?
It's not a common knowledge out there that that's happening. So people who did loans 6 months ago, their rate's not as competitive as a new client coming in, which is not quite right, but it's happening.
So explain to me why you said a lot of people don't know about it.
We don't hear about it in mainstream media.
Why is that?
I don't know why.
Yeah.
Any ideas? I guess they don't want to advertise it because they'll get bombarded with requests.
Yeah.
We are. I've got about 1,000 clients. We've probably done about 300 where we've repriced it. We didn't have to change a bank, just gone back and asked for a better deal.
Yeah.
But knowing that new clients are getting a better deal than a client I did a year or two, even longer, the further away it is, the worse that rate is. So we're telling our clients through our newsletters and when we're seeing them and talking to them, saying, just let us check in every now and then and we'll make sure it's competitive.
Yeah. Well, you do that anyway. You've done that with me throughout our dealings, which has been fantastic. So your advice to our listeners and our viewers is to go get a health check on your mortgage.
Yeah, check in with your broker or the bank you're generally going to get something, and it doesn't cost much. It'd be a little bit of time. That's about it.
So if they're not your client, do you want them to check in with you?
Or they can, but they can check in with whoever they dealt with or with the bank they're with directly.
Okay, well, as soon as you're here, rateone.com.au. Yep, there you
We'll
go.
try and keep up with them. We're
I
hiring
don't want
staff.
to. Are you busy enough? Are you?
We are busy. We've got one start about 2 weeks ago, another one starting on Monday.
Yeah, next
so we're trying to, because, again, you've got to provide a certain level of service, and there's only so much someone can do. We've got a team of all up at probably about 50, 60, but
Wow.
you need people that have got the knowledge to have that initial chat, and that takes a bit of time to train up.
Yeah.
But yeah, anyone can contact their own broker or their own bank, and they'll generally get a better deal just with a phone call.
And there's no cost associated with that, is there?
And you don't have to change banks. You can just, like I said, ring your own bank, and they'll probably drop your rate, or ring your broker. And if it's not competitive, that's when you may look elsewhere.
Okay, talking about banks, you've been in the system. Yes, you work for
Yes.
Combank.
Yes.
What are some things that we don't know that they know that we should know?
That's
What do we
very
got?
good
We got
question.
some secrets. We got a top 5 or something like that you can tell. Or
Talk about sort of credit cards and how they affect your borrowing capacity.
Yeah. Well, when you're going into, and this is more borrowing capacity, this is how much you can borrow.
Yep.
Where if you've got a credit card, every 1,000 limit that you have, even if you don't use it, you've just got a credit card. Sometimes when you go to the banks and they offer you a free credit card, or they offer you've been pre-approved, we can give you a credit card sent out to you straight away.
Yep.
Generally, you don't. Some people don't really use it, but if you've got a 15,000 limit or something like that, every 1,000, I think it's about 7,000 on your borrowing capacity. So even if you have a credit
It takes it off your borrowing
card, it
capacity.
takes it off your borrowing capacity.
It's just, so if you've got a half a dozen credit cards that you don't even use, and you've got 50 or 60 grand worth of borrowing power, what's that? 642.
Yeah, about 20 grand's a card to take about 100,000 off your borrowing capacity. So some people that try and think I can't do it, but they feel they can afford it, it could be that's part of the reason why they won't lend.
Talking about credit cards, I remember in my early 20s, there was a lot of my friends that had mortgages, and they were told to run everything through their credit card. So all their expenses, everything goes through their credit card, and then their wages should be chucked on the credit card to bring the balance back down.
Yep.
Is there any method to that madness?
Yeah, there is a bit. If you know what you're doing, you can buy yourself, I think it's like 45 days interest free, but you'd have to be pretty good and disciplined. Some people, by using cards, don't get the normal spend, they'll spend more. So unless you're a special type, I'd say probably not to do that.
Yeah, and that's what the banks want, don't they? They
that's
just want you to, and unless you got rewards attached to it, there's no other benefits,
correct.
is there?
Yeah. I think you have a mortgage, and you use a credit card, and you have that 45 days interest. You're not immediately spending the money that you're getting paid on, so you can put that in the offset, and that would offset it during that period of time where you don't have to pay. But as Ted was saying, you got to be very disciplined. You got to know, you almost have to have a schedule and a calendar, and otherwise you'll just be charged with interest
And
fees.
control the spending.
Correct.
If the spending habits change, then there's no benefit.
That's right.
Yeah. So
They get
basic.
you.
I mean, the one thing, and the one thing that I do with Mav is teaching them the value of money and what it can and can't do. I think it's really important for kids from an early age to understand exactly what money is, what it can do for them, and what it and the pitfalls of it, going forward in your life. So, getting back to, we're talking about the banks and their secrets.
Yeah.
So the credit card ones. Is there anything else that we need to know from behind the scenes?
I think that's just mainly about the borrowing capacity side of things. Working in the banks, I think, they're generally, most of the times when we were working at the banks, we were told we could only provide one product.
Yep.
So a lot of the times we don't know what else is in the market, and most of the time we rely on the clients or the customers that come in to tell us, all right, well, Bank of Melbourne, Adelaide Bank, whatever, is providing these rates, and we try to negotiate and try to get the same rates. A lot of the other times, when you work for the same bank, you have a certain set of policies. So each banks have their own policies in terms of credit and how they lend out money. And this is the main reason why I actually decided to get into brokering, is because when we work straight with the lender, you don't really know much about what else is there in the market.
Yep.
So what you could be providing to the client, even though you think is the best and what you can do, it may not be the best in general.
Which, as you say, which is the difference between working for a bank and doing what you guys
Exactly
do. So
right.
you've got...
Correct.
So how many lenders do you have at your disposal, and do you have favourites? Are you enticed by is it like with the doctors and the prescriptions that they go to conferences and get free lunches to prescribe stuff? Is that the same with lenders?
Not quite. We've got about 40 on our panel. They all pay us pretty much the same. There might be some slight difference. I couldn't tell you because really it's negligible. Since the Royal Commission, there's a lot of rules and compliance around what the lenders can do to incentivise. You might see a bit of movement in our industry that the public don't see. It's just that aggregators can't be owned by the banks now. Little things like that, the banks are getting out. And a lot of it was a perceived conflict of interest, but in reality it probably wasn't there, but they're all getting out because of this perception. So you're getting less and less of it.
Yep. You got any favourites or any...
Favourites in terms of easy to deal with.
Yep.
That's
But
the one.
we try not to pass too much that bias on. I've got some clients that want to go to banks that are difficult to deal with. I'll let them know it's difficult. It could be slower. Could be a worse experience. But if they really want it, we'll go there. We get paid the same. It just slows us down a bit. Or just some are better at others that they're in their internal processes. So there is sort of favourites in that way, but not really in a payment way.
And of course, the people that don't know, mortgage broking, the service is free.
Generally.
Generally, yeah.
You say generally, so when is it not free?
Or we don't charge for the majority of clients. I'd say 98% of clients. If it's a really difficult situation, it's going to take more time than normal. It could be a really complicated loan. Generally in the commercial space, we do mainly residential. Fees are charged because it's you got to package a loan up differently. But for your standard home loans, I'd say 98 in our office would be charging for a fee for a home loan.
Okay, so you guys get paid from the banks. That's
Correct,
how it
yeah.
works.
Correct.
And it's structured on the term of the loan, the volume of the loan.
It's based on the volume.
Volume of the
But again, a perception there came out of the Royal Commission that the more money we lend, the more we get paid. So they've brought in policy around net of offset. So it's really the money used. So we're not incentivised by pushing out more money, but obviously the more business we do, the more we get paid.
Yeah. So you're not trying to upsell somebody and getting them to borrow more when they don't need it.
And even if we do, we don't get paid for it now. So
Okay.
so that's something that's again a perception, but it's that's taken away now. That percent we don't get paid.
So we talked about the Royal Commission a couple of times. I've got on my whiteboard up there bankers, which is probably one letter short of what I think about them. Is it a general perception that banks are a force, well, higher than mighty? Is probably another way to put it. I mean,
I think like they're
allure into their own.
they're in the business of making money, and they don't like taking risk. And I'm thinking that's the type of business I want to be in, making money without risk. So there's a bit of jealousy, frustration sometimes, but also don't help themselves in the past with when they bring up they're making huge profits and they're not looking after their existing customers. That's for me. That's probably the biggest frustration. That our job is to bring clients to them, and then occasionally we get clients come back to us after a few years or even a year or two, and they're not happy. And then we look at what they're doing, and that's the bit about the rate review. And we feel like saying, hey, we've given you the customer. It's a good customer. They're paying the loan on time. They're loyal, yet they're paying more than a new customer. And that's just not right.
Yeah.
So that's, for me, that's the frustration. It leads, and that's why brokers now doing 70%. People don't want to deal with the bankers whose interest is more for the bank.
Yeah.
So it was something that came out also recently. We've got a best interest duty as a broker, that we have to act in the best interests of our clients. So that at the back of our mind, it should have been, I think that thing you read out, I mentioned interest on my clients. That was done probably 10 years ago. But now it's a law for us that we have to follow best interest duty.
Well, I think that goes for any business, doesn't it?
Well, the banks don't have to. Because they've got their own products.
Yeah.
They can only sell those. They don't have to offer the best.
Yeah. But I think as a general rule of anybody in business,
You'd think so.
I mean, your clients are that's that's your bread and butter, isn't it? You know, that's what you do all day, every day. Wow. No more secrets about the banks? Come on, I'm trying to draw some juiciness out of you.
Well,
You're seeking for an answer on it. I'm thinking, what's of it?
we're running
That's
credit
cool.
reports on every
Yeah.
client now, and it's great for us. And I tell my clients, we'll give them a copy of it after we run it, but we get to see what the banks can see, and we give it to our clients. So it's interesting to know what's on your report now, and you can get that for free online. But it now shows 2 years' history of all your payments that people sometimes don't know what the people will know about them when they're borrowing money.
So every payment, like every direct debit or every... So, because
More on credit facilities, so home loan,
okay,
personal loan, car loan, credit card. But then also if it's phone and gas and electricity, it's not every month, but if it goes past a few months, then they can lodge it. So it's good to know what's on your credit report. Quite timely with all the fraud and scamming going on, that some people, identity theft, that people are aware. So
wasn't there a point there that the banks were even looking at your Netflix subscription? That was in the media? Was that correct?
yeah, it was true. I mean, certain banks were harsher than others, but yeah, it was happening. And even now, to a degree, they've passed the buck down to us, saying that we need to take responsibility and check people's spending. And really, I think it's gone a little too far, but within reason, it has a point that people control their spending and they know their habits. But yeah, if they're spending money, they can't afford it. Yeah, it's simple as that.
Yeah, something to note. The banks treat health insurance, or certain banks treat health insurance, life insurance, on top of
Private schooling
on top of your standard living expenses.
Oh, really?
So that it's almost like if you're paying $300 a month for health insurance, that will drop borrowing capacity for someone who's not paying $300 a month.
Really?
Yeah. And
Yeah,
if you-
health
same
insurance.
product,
Yeah,
Where's the
yeah. It's
what's that all? I don't understand that. Why? Why would that be the case?
Or they used to in the past, a client would declare their living expenses and we would just accept it. So it's gone from one extreme to another, that they're going over the top. But people got things they need to spend money on. It's compulsory, or health insurance. For most people it's an expense. Private schooling is the big one.
Yeah.
Unless you're on mega bucks, you got kids in private school, you're not getting a home loan these days.
Yeah.
It's all right, Mav. We're fine. We'll get you into that school, mate. Don't you worry about that. Even if Dad has to give up his health insurance. trying to make finance fun.
Yeah.
Oh dear. So, well, look, from my point of view, a couple of months paperwork on somebody, you can get a pretty good picture of what their spending is, don't you? Their income, their outgoings, just from a couple of months.
Yeah, but there's so much discretionary spending too. So that's the bit it's a grey area, that if someone's single, got no commitments and wants to go buy a home, and they might plan on cutting back, or they have to cut back. So how do you determine their spending, future spending? So there's an element that's grey, that's hard, but yes, you can. I mean, we also we fill out an assets liabilities for every client, and you get a feel of a client pretty quickly by looking at their asset liabilities and how they spend, and if they've got lots of cards and not just having cards, but having debt outstanding, car loans, no savings, limited savings, no money extra into the loan, no offset or redraw. There's a bit you can tell just from meeting a client and going through the basics.
Yeah. So I read somewhere a couple of days ago that Melbourne's heading towards a $2 million medium house price by 2030. Are we believing this? Is this
I think I saw that one this morning.
Yeah. Oh, this morning. You're a week late, mate. You're a week late. Yeah, 2030. So what? Mav's going to be 20. He's probably not going to be quite a first home buyer by then. $2 million for a medium house price in Melbourne. Do we think that's where it's heading? So, what's the rule with property? You buy property, and within 10 years it should double.
Yeah, that was
should double. Is that true?
It has been. I don't think you can count on that going forward. I think, and if you go maybe another 10 or 20 years, it might get back to an average of that. But we've had so much growth the last 20 that you probably can't expect it to continue. And you do hear different headlines at different times, but I mean, the inflation is probably a cause of that too.
Yeah, correct.
And I mean, what's your median is probably a nice house in I don't know, 2 million.
Yeah,
What suburb? Maybe in Keysborough out this way, but you can buy a lot cheaper further out.
that's right.
Yeah.
Yeah.
Well, that's the thing. Like specifically with Melbourne, the further out from the CBD, the cheaper it is, depending on which direction you go, of course.
Although sometimes I know Ted and I were talking about this last week, where one of our clients bought in Clyde, or Officer, which is
Yeah, $1 million out there.
yeah, it's $1 million down there. How
But your
far is that?
lifestyle
It's like
blocks,
an hour,
things are
hour.
changing a bit. Going out now, people are paying a premium. I think it's coming back now. The regional areas are starting to drop again, but yeah, COVID changed a bit of that with where people want to live.
So we got that rush of people wanting to get out of the city, get lifestyle blocks. You guys would have done a bit of business with regards to that,
Yeah, definitely.
People moving up to Brisbane.
Queensland.
Queensland.
and now people are coming back. Are you seeing that? I'm reading that.
Yeah.
Well, we don't see it directly, as in like they don't tell us they're coming. I haven't seen a lot actually coming back yet. I think maybe a few are thinking it. Going up to Queensland looks great for a holiday, but when you move up there, it could be too hot for them or
floods
too
come in.
remote. Yeah.
I actually read it was another article about a Melbourne couple that had retired up to Noosa and have come back to Melbourne because they're just bored shitless.
Yeah.
It's just, but then in 4 years they turned over 800 grand on the property.
They did okay.
Right.
Yeah, they did really well.
Yeah.
Yeah, which is a good position to be in.
Yeah.
I was trying to think where I was going with the lifestyle block thing, but as I said with Mav, in 2030 he's going to be 20, so Dad's going to have to do a bit of investing between now and then to help him into a property for sure.
Yeah.
Well,
What-
it used to be the bank of mum and dad helping last probably 10 years, done a lot of guarantor loans. But now those government incentives that Nick was talking about earlier is effectively that. They can get in with little deposit.
Yeah,
Still-
is that a good thing though? Is it if you're at your maximum borrowing capacity and you're lending 95% of the loan, the house value within 5 years is not going to be that much more. You're not going to have a lot of equity in it, and technically, you know better off.
Yeah,
Is it a good thing, or is it best to wait and get a bigger deposit, or what's?
Well, I get that question a lot. Should I buy now? Should I wait? And for me, it's more around the timing and what their plans. Because if it's short term, they've got to be careful because prices are not probably going up in a hurry, perhaps possibly going down. So if they're buying for the long term, I've got no issue because in general it'll go back up. But if they're buying and looking to sell or forced to sell within a few years, they're probably going to lose because you've got costs getting in, stamp duty about 5%,
Yeah.
and then cost to get out your agent fees and bits and pieces 2-3% again. So
You lose your job, your missus gets pregnant.
we
you
got to have
gotta
that
sell.
insurance.
Oh, so but didn't we say it wasn't that
That's
was
health insurance, but you get your income protection and bits and
And life
pieces too.
insurance.
I mean, there's people at all different levels we see that some are higher risk than others. Some should take fixed loans. Some should take out that it could be a couple that's highly dependent on one income. He needs to have protection. So we see a broad range of people, some high risk, some aggressive, some passive. But in general, I think if people are buying for the long term, they should be okay, buying within their means. And if they're pushing it to the upper end, that's when they start looking at fixed rates
Yep.
and getting some insurance for themselves.
Do you sell the other products? Do you,
What do you mean sell?
with regards to mortgage
Insurances.
protection and insurances for what are we talking about? Workers.
Certain clients I highly
income.
recommend it. Yeah, definitely. But we don't sell it. We're not allowed to. We're not qualified to give insurance and tax advice. But we recommend they speak to someone.
Yep.
And some people we see, it's been doing it 20 years. I'm the one also gets a call when things go wrong. So it's easier to talk about it now because I've seen both sides.
Yep.
So I'm more than comfortable telling people I think you should talk to someone about getting some income protection or if you're borrowing to your limit, maybe you should think about fixed. Again, we can't say you should do it. But yeah, it's some clients are pretty easy to see they're at high risk or they're more aggressive than others. So it's easy discussion.
Have we got a percentage for a failure rate
It's pretty low.
on mortgage loans?
Yeah, I mean, the stats are out from all the banks and it's less than 1%, I think.
Oh, really?
I couldn't give you the exact figure,
No, I'm not.
but it's pretty low. But it's been a good environment
Yeah.
for the last, even through COVID. I think the start there was getting the government help.
Yeah.
Yep.
But then a lot took it because they thought was going to happen. Then it wasn't so bad.
Yeah.
But yeah, I think the numbers are pretty low still. But the rates have been. You want to bring up that chart? That's a pretty good.
Yeah, man. Have you got that chart?
Well, why is bringing it up? I think with unemployment rate keep being at low, we do see a lot of people changing jobs, getting high pay rises and things like that. So that really helps with, the confidence and
Yeah,
the mortgage
definitely.
repayments as well. Yeah.
Definitely.
Well,
What are we looking at here?
Well, a quick
for our
one
listeners?
here. This one came out from Macquarie maybe about 5 months ago, 6 months of July, and there's a lot of talk on the news, and I get it. It makes headlines, but the reality is rates are still quite low. Matt, if you want to flick to the next one, because this is about 5 months old, but I looked at one during the week, and this is more up to date, and you can see where the blue line is. It's still quite low in historical. So we're at rates now about where they were 10 years ago. So people that got in recently, they're thinking, wow, what's going on? It's more how quickly it's gone up is what's affecting people, not where it's at.
Yeah.
And if you want to go past that, it's more predictions on, and you look at fixed rates at all the banks.
Okay, for our listeners, we're looking at a chart of historical interest rates. So currently at the moment, we're sitting at, 3.85?
Yeah, that's the Reserve Bank rate, but in reality, it's about sort of high fours for the Joe Public.
And the last time we were there was about 2013.
Yeah.
Yep. So as you say, technically they're not that high. But what's happened through all this inflation and COVID and that the rates have gone up and people have borrowed when it's low, or they've been on interest only.
Not so much of that. That happened a few years back. The government sort of cracked down on that, so that's one good thing. But the people that came in recently just wouldn't be used to it. But people have had houses for 10, 20 years. But it's more the speed that's gone up and the expectation that it wasn't going to go up. That's hurt a lot of people.
Yeah, it's definitely a shock to the system for a lot of people, isn't it?
Well, and it go every month.
Yeah, it was seven.
Well, it's hard.
seven
It's hard to
times.
keep up, even for us who are in the industry. Of what's the right rate now, and they're moving at different times.
Yep.
So you hear it on the news that it goes up, but your bank might do it 2 weeks later, and then they'll announce another one a few weeks later, but pass it on a few weeks after that. So it's pretty hard to keep up.
Yeah.
Well, every month I've been getting a notice from the bankers like, Jesus, I don't want to look at this one. But yep, it's gone up again. Thanks for coming.
And a lot of people on fixed have just come off or coming off, so that's a big shock too. They're going from 2 to 5.
Yeah, I've got a few friends at the same thing. That's where all my spare cash is going on the extra interest rate.
Yeah, whether you didn't want to think about it, but they knew it was coming. But when it hits them, it's a big
Well,
difference.
as you said, 9 months ago, we didn't predict this. That we couldn't see this happening. Couldn't
Correct,
see it
yeah.
happening. Couldn't see it
Or
happening.
fixed rates were, even back then, I think September last year was the time, if you had a fixed it then, you'd be pretty happy.
Okay.
But if you missed the boat,
So 9 months ago, you could quite happily fix your loan.
we're getting 2%, in September last year.
For how long?
Even 3, 4.
3 or 4 years, yeah.
Wow.
Get it.
How happy would you be if you're sitting on that little
Yeah,
gem?
I've got a handful of smart clients that did it for 5 and got 2.5%.
Yeah.
So
Wow.
yeah, they've still got probably 4 years to go on that. They're laughing.
Damn it. Missed the boat on that one. Anyway,
You're not the only one.
hey, talking about first home buyers, what do we got? And we got a top 5. We got a top 5 tips for first home buyers.
I'll be checking the government incentives. Some really good ones out there. Nick mentioned that low deposit scheme. That's definitely one. If you qualify for those government schemes, take advantage. You don't need to rush, but if you're going to buy and you qualify, you use it for sure. That's probably the best one, I think.
Yeah.
What about a young couple setting themselves up? Where do they need to be? If I'm talking to my son and his wife and they want to get into the housing market, what are we telling them? I mean, money just doesn't fall off trees. We know that. You've got to work hard. But once you've got money, you can make money. So getting back to some advice, I mean, just save. Is that all we're saying? Is it save, and save some more until you've got how many percent? 10,
Or
20%?
If I'm seeing a buyer early, you're saving, I'm definitely telling them to do it. And it's not so much it's going to make much difference, but it sort of gets in the habit of putting money aside. And effectively, if someone's living at home and can save $2,000 a month, then when they come and see me and I'm showing the repayments and it's $2,000 a month, they can comfortably say, well, I can afford that.
Yep.
Whereas when they come in, they might have a gift from mum or dad, but never saved. It's a big shock to fork out because they're not paying rent generally.
Yeah, exactly.
So either if they are paying rent, what money they can save on top, and that sort of tells them what they can afford, and then we can work out borrowing capacity.
And for the scheme, the banks generally don't accept having a gift. They have this thing called genuine savings, where they want to make sure that they have been saved.
So if they know you've got a
Correct.
golden handshake from somebody,
Yeah,
like
correct.
an inheritance, that's, well, I mean, as you
It's
say,
got to be a lot if it's going to be that.
It's got to be,
it's got to be
20%,
enough
yeah.
to buy the whole thing outright. Otherwise, the
Yeah,
bank's
that's
not.
right.
Yeah, indeed.
That's right.
So, top 5 tips on first home buyers. Now, buying your first home, apparently, it's the biggest investment you'll do, or the biggest thing you'll do in your life. That's how it's
pretty
how it's
emotional.
touted, and it's emotional. Exactly. And definitely when there's a husband and wife or 2 people involved, everybody's got their own opinion, but when it comes down to it, the nuts and bolts of it is, can you afford it? So we're talking about save. Ideal scenario in this day and age, we don't want to borrow any more than 85, 90.
Oh, it's in terms of your borrowing capacity. It's generally, it used to be up to about 6 times your annual income.
Oh, yeah.
It's getting down closer to 5, depending on your commitments. But that was about the guide that we would use. And now the banks are using a DTI, debt to income ratio of 6 as a max. They push it for certain clients, but yeah, for our first home buyers, a lot of it's about preparation. So we want to come and see them nice and early, let them know their borrowing capacity, because once they go out there, the agents are very good
And what they do.
at creating urgency, the fear of loss.
Yeah.
And you get clients that overcommit or
It's
get
pretty
the
emotional.
hopes up and then get let down.
It is. It's emotional, isn't it? And a lot of people bid with their hearts instead of their heads. Especially in an auction situation. As you say, the real estate agents are going, oh, you've got to be in to win. You've got to be here. You've got to do this. Otherwise you're going to miss out. And
FOMO.
And yeah, somebody goes.
Well, they're doing their job. They're working for the vendor, not the buyer.
Exactly.
Yeah.
What's your opinion of real estate agents?
Well, I think most, like I said, they're doing their job. They work. If you're selling, you want them doing all those things they do.
Yep.
But as long as the buyers or first-time buyers are aware, they're not working for them. And I think they should have a representative on their side if they don't know what they're doing. If they're not good negotiators.
So we're talking about an
A buyer's advocate. Yeah, I believe in them. I've used them myself. I
Are
don't.
they free? Is that a free service or not?
Generally not. No, they're not. They're not free. Some charge a flat fee, some charge a percentage. But I think what they save, what advice they give, the time they give back to a client and expertise, I think they're worth it. Not everyone needs them, but if you're not sure what you're doing, you can't negotiate, or you don't have the time, I think they're great. And for certain clients I meet, I'm thinking you should have one. And I'm one of those clients because I don't like spending all my time on weekends looking at properties and all the hassle back and forth. I'm happy to pay a fair price. Don't want to be ripped off, but I don't want to go through all that hassle. So and they're just doing their job, so I get it. But a buyer's advocate is representing you, doing the same back to them.
Yep.
And with generally their ex-agents or people who've done a lot of it, so they know what they're doing, and I think they're great.
What about you?
Top tips?
Give me one.
I'm currently working with a lot of first home buyers, and first home buyers have they tend to have a perception that they can afford more than they can actually borrow, and that's generally just because of they jump online, do a quick repayment calculator, work out that getting a $600,000 loan is going to cost them $3,000 a month, and they can afford that.
Can I just stop you there? Are they a good thing or a bad thing? Those online
Repayment
calculators.
It's a good guide. I would say it's a good guide to put that in as part of the budget. But one thing that the first home buyers don't really know in terms of the mortgage process is Ted mentioned earlier, that the banks put in buffers to be able to protect the actual clients who are getting the mortgage in case of interest rate rises.
Yep.
For a long period of time, it was about they assessed the loan at 2.5% on top of what the rate is. It's recently changed to 3%. It's been like that for the last 6 months or so. Meaning that even though you're paying $3,000 a month, they calculate it based on $4,000 a month.
Yep.
And most of the time when, first home buyers, when they do that calculator and they work out a guide, they get shocked when they realize that they can only borrow $200,000 less.
Yep.
And it's a tough conversation because their mind and they're ready to buy something at Keysborough when they have.
And they've
to
got
get
the
pushed
heart
out.
set. They've got the heart set on it, and they've got to
They got
go out
pushed
to
out,
Craigieburn
yeah.
or somewhere.
So
Or smaller, a unit instead of a house.
Yeah. So what Ted said to kind of be prepared and speak to us early on is a really big. It makes a big impact. and it sets the expectations right. At
Well,
that point as
considering that your service is free, I mean, why wouldn't you?
Yeah.
That would be the first phone call, wouldn't it? So,
Yeah, I still like face-to-face meetings with my clients. Once I've met them and we know them, it's easy to talk phone and Zoom and bits and pieces and email. But a first-home buyer, those appointments are generally longer. There's more questions. There's more things they don't know. So it's educating them as well.
what are some of the things that they don't know? What are they asking you?
Well, so the borrowing capacity Nick was talking about has dropped dramatically. So if you did your sum 6 months ago and you could borrow 600 grand, you might be able to get 450 now. So that's been a big change. The banks give pre-approvals at the moment. They're valid for only 3 months. And some banks, it's valid until the rate moves. And because they've been moving every month, you can get caught out. We've had a bit of that. So
it's tough.
that's little things there that our first home buyers are catching a few of them out. So we need to keep in touch. On the buying side, they should be buying subject to finance if possible, but auction you can't do that. We don't get a lot of issues with property prices coming down from valuations, but little things get picked up. Property type, next to a freeway, next to a railway line, asbestos, little things like that can catch people out.
So another bit of advice with looking at buying a property would be get somebody to inspect it, obviously, wouldn't it?
Yeah, building inspector.
Is that part of the process with the lending, that it's required to have a
No, not necessarily.
No?
Generally, yeah.
The bank will do their own valuation, but most of them now they're doing online. So,
Yeah.
but if you're borrowing high risk, high percentage, they will go out to the property. If things wrong,
Yep.
they'll pick it up. You should get a conveyancer or a legal rep to check the contract in Section 32 before you buy. There's a lot of that.
Well, I thought that was standard. I thought it was a
Yeah,
legal requirement.
it should be. But some people buy it without and then talk after. So it's a bit hard to go back and get out of a contract.
So just explain us Section 32 for our listeners and our viewers.
Yeah, so if you go look at a property agent, before they can sell it, they have to issue this document. It's generally like 100 pages or so of guff. And a client will look at it and go, yeah, okay, and put it aside. That's
What sort of guff's in there?
Well, the things that they should be looking at, or that the legal person will look at, will be details about the title, the land, if there's encumbrance and easement. So, for example, there's pipes under the ground you're not allowed to build over in the backyard, and you might be planning a shed there, or you might be planning a subdivision. If it's a unit, it'll have minutes of the meetings, the body corp meetings, might talk about leaks. Cladding issues. Cladding's been one that's a bit of a hot topic with.
Well, I've had some experience with that myself.
Okay.
Yeah, we actually sold an apartment that had to be the building had to be completely reclad. So there was a body corporate fee for each unit. Luckily, I mean, obviously it's in the Section 32, but the buyer was quite happy to accept that. I think it was 30 or 40 grand on a one bedroom, which is you know, it's a chunk of change on top of. I mean, I presume that they would have looked at that and said, look, after it's all done, the value of the property is going to go up by that anyway. So they're probably not worried about it. But that's the sort of stuff that you got to be be
and
worried
that's
about.
what a conveyance will pick up. It could be car parks or the cages for your storage and that sort of thing that you might not look at when you're looking at a unit. So a conveyancer or a lawyer will pick up those little things. Even the contract being non-standard and might have terms and conditions that favour the vendor and not the buyer. Big one we see, and especially first home buyers that are buying land, I get a lot of this where they buy land now and the agent selling the land might say, look, we expect it to settle in a year's time. And I get it from their side point of view that they may think that, but generally there's government delays. Maybe they're told it's a year, but really it's like a year and a half.
Yep.
And the first home buyer going to buy something, he might not buy something that's going to settle in 2 years. Yet the reality is that's what might happen.
Yeah.
So they sign contracts and it says a finance clause a couple of weeks, but really the finance clause is irrelevant because we're not settling for 2 years. We have to redo the finance in 2 years' time. And they'll have a clause around settlement. It's 3 weeks after the title. No, 2 weeks after the title's ready. Yet it takes us, best part of a month to get a loan ready.
Yeah.
And we get a loan approved, it expires. They come back to us 2 years later and we don't know when that date is. And then all of a sudden we get a phone call, hey, it's going to settle in 2 weeks. And it's always a rush. So we try to tell them, look, sign it with a 3 week clause at least. It gives us enough time.
Yeah. Yeah.
But you get a bit of that. And they're little things you don't think about when you're first buying, and a lawyer will probably, or a conveyancer will give you some guidance, or a broker, because we're on the side that has to suffer the rush, the mad rush at the end.
So a time for settlement we just talked about. Is there anything else that you're advising your clients before they sign on the dotted line?
Oh, get a pre-approval. I mean, they're free to get, no obligation to go ahead. So it means they've had the conversations around, choice of lenders, what the repayments are, how much deposit they need, the documents they need. There's a bit of work now with the compliance. It's hard for us to put a deal together in less than a few days. So if you're buying and then talking to us, it's a rush.
Yeah.
And you might be compromised on where you can go.
And when you buy, don't change your jobs.
Or
No.
go on holidays.
Oh yeah, that's
Yeah. We got a lot of clients that buy, then they think it's all done, and the finances approved, but then they go on
I
holiday.
think my wife did both of those things. When we did because we came back from overseas and and she changed jobs.
We're
So
running
there you
around
go.
rushing to sign documents
we
last
would've
minute.
done that, yeah.
With that ideal client you guys love. Perfect.
Experience.
So, first home buyers, we've covered what they should and shouldn't do. If you've got a nice, lovely little family, 2.5 kids and a dog, and you've had your home, your family home for 5-10 years, you've got a bit of equity. When's the right time to get an investment property?
Good question.
It is a good question.
Yeah, when they're ready, I guess. There's a lot to consider buying investment
Well,
property.
we get a lot of that. Some people are doing it through the super now as well, but they've got to have that need. Maybe they've got financial advice with the accountant. Sometimes it's a tax, but the
Right,
accountant might recommend it for negative gearing. Having equity is a good start. They can get in with a little deposit that way, out of their pocket effectively.
Well, that was pretty much what I was getting at, is that you've got to have equity in your existing home to be able to do anything. So your money's made money, and that's when you can start having that money working for you.
Yeah, avoiding the insurance premium is a good start. It gets a little cheaper on rates too, the lower the risk of the loan.
Yep.
So having the equity position is a good start. The borrowing capacity, obviously, now is pretty important. And
If you're buying an investment property, if you've got an existing dwelling, or existing mortgage, existing home with some decent equity in it, is the borrowing capacity requirements a little bit more relaxed because you've got that existing?
they will, the banks will look at exceptions, or they're more generous if it's a lower risk loan, and that's having a fallback position. Either it's savings the bank or equity. So if you could sell a property and get yourself out of trouble, they're more they will relax some of the rules, the lower the lending.
When you buy an investment property, they do consider rental income as part of your income.
Yeah.
So that does increase your borrowing capacity based on what you've had previously if you just got a home.
Yep. So technically, as I said, if you're in that position and you've got a bit of equity, that's probably the best place or where you'd want to use it.
It's a good start, but we're also seeing first home buyers now. Like you were talking earlier about that Mav can't buy a place for $2 million. They live at home and they want to get in the market. So we're seeing, they call them rent investors, where they're living at home or renting.
Rent vestors.
Yeah, well, they're not buying a home, but investing in a rental property.
Oh, right. Okay,
Yeah.
I see. Yep.
So, because they can't get what they want to live in a nice place close to the city.
Yep.
So they might buy a unit out in the burbs that's cheaper, and it's their foot in the market.
It's a good alternative, isn't it? Best way to do it.
Yeah, when prices were going up and people weren't getting what they want, and especially younger people wanted to be close. It's changing a bit now with where people want to live, but you get a bit of that as well.
So essentially, your job is to get people into debt.
Yes,
That's what you do all day, every day.
that's my job. People love me for it, and I do say that my job's to put you into debt. Generally, put you at a higher risk than before you came and saw me, but hopefully also in a better position long term. But so part of that is I say to them, look, you should review your insurances and bits and pieces. So I generally ask for their super statement, because most people have insurance, but they don't know it, and it's in their super.
Yeah, exactly. Yep.
But I used to work in super 25 years ago now, and the amount of cover that's in super now is about the same as it was 20 years ago. That people are insured for 200,000-300,000, but hasn't really kept up with debt levels and property prices. Most people's home loans, even first home buyers, are 500-600 minimum. So they're just not thinking if something goes wrong. So we recommend they talk to a planner and get some risk advice.
Yeah, and you guys got a division that you can.
We got a team that will ring them as part of the process. More compliance now, and some I highly recommend they talk to them. Others are pretty low risk and they've got it under control. They've got insurance, so it's not a big deal. But in general, I'm putting people into more debt than before they met me.
And we were saying earlier, so 70% of all the home loans are done through brokers.
Yeah, so that's it. And it's gone up since
Yeah, when I
last
started, it
year.
was at about 30%.
yeah, right.
I mean, it sort of shows the value of a broker, but
Yeah, a lot of that had to do with the Royal Commission coming in and really going through and reviewing the process of what brokers do. And since then, it was about 2016, 2017, when that happened, they implemented a few more things for brokers to be able to do, which we touch base on the best introducing duty, which is putting the best interest in the clients, and everything that we do is revolved around that.
Yeah,
Um,
because banks were doing some shifty shit, weren't they?
there were some
They were
policies that
selling,
were...
and they were selling mortgages and insurances that were just
yeah.
not worth the paper they were written on.
Yeah, it was like credit card insurance, things like that, yeah.
So I think now, and that was more the reason. And right before the Royal Commission is probably when I started getting into brokering. And it was at that period of time where we were so when I was working at a bank, and we were very pushed to sell external products, or not external products, alternative products. So they're coming in for a home loan, or they're coming in to change their money.
So you're supersizing them.
And that's
you're
right.
selling
We're
them.
adding fries and chips.
Yeah.
Fries and drinks
Yeah.
on everything that they're doing. And
How'd
even if
that
it's
make you
just
feel?
small
That make you feel dirty?
Yeah.
Yeah.
Help me with my sales skills though, so that works in the way.
Well, technically, right now you don't need sales skills because the service sells itself, doesn't it? As we said, you don't generally charge. You've got all the advice that a buyer's going to need, and there shouldn't be any reason to go directly to a bank.
Yeah.
So we're definitely not going to endorse banks on this podcast. That's for sure.
Well, I find it easy when I'm recruiting to talk to our new brokers that I think the job's very easy what we do. You got to have the knowledge and the experience helps, but you're basically helping clients out. You're not charging, and you're providing service and that they can't get from the branch. So it's pretty easy from that front. If you help your clients, you can't go wrong. And
Well,
the
banks
numbers are showing that.
Banks are closing down branches, aren't they? They're
that's right.
going to become a thing of the past.
Yeah,
I mean, first it was ATMs, now it's branches. But from my experience, why would you want to go into a bank branch anyway? It's just a terrible.
Waiting lines.
And it's a waste of time.
Yeah,
exactly.
yeah.
But that's the world that we live in now. Is technically, with all this technology, everything should be at our fingertips and instant. But that hasn't changed with banks because you can spend time on the phone, you can email, they won't get back to you. Your call centre's offshore, and you're not getting the level of service from a bank that you would from the cafe down the road that you get your coffee from.
Well,
And they're making more money out of you. That's what shits me about the whole system.
well, that's why we're busy.
Yeah.
So one view I get frustrated with banks, but the other side I look at it, I go, they're making me busy. They're making us look good, and it helps us. So
Yeah.
they can keep doing what they're doing, but I think brokers, if they look after clients, we're fine.
So we touched on pitfalls. Is there any other pitfalls that our listeners, our viewers should be looking out for, should be aware of with regards to the process of getting a mortgage broker, trying to find a loan? Anything you can advise them against or to look out for? Because there's a lot of naive people out there, and we've said it here many times, you don't know until you know. Now, obviously, what you guys provide, the service that you provide, negates everything, which is fantastic, but a bit of advice.
Well, timing on a purchase can make it, especially this time of year, you can try and avoid Christmas settlements. The banks will slow down through Christmas, through everyone wanting to settle before Christmas, but also staff being away. So trying to settle things before Christmas need a lot of preparation. So we get emails at this time of year saying this is our deadlines. If you want to settle, it has to be in by this date. So if clients come to us after that, it sometimes can be tricky.
So what happens if you can't settle? What's the worst case scenario? Do you get penalised?
Penalty interest is what can happen. It's generally a few $100s a day. So
Really?
around Christmas time, if it's
hurts.
2 weeks, it can add up.
Yeah.
Yeah.
That
So that's
definitely
one
hurts.
little thing I'm telling my clients: settle pre-15 December or after 15 January.
Yeah.
We can settle in between, but as long as it's all prepared.
It generally takes about. Yeah, if we're doing, it generally takes about 2-3 months from the whole start of the application process all the way to the end. So to kind of get an understanding of that. The only thing I can think of is when you get a loan, your first repayment is 1 month, generally 1 month after, depending on how you choose.
After settlement?
After settlement,
Yep.
Correct. It gives you a bit of time to actually work out your planning and everything like that. Yeah, when we spoke about just in regards to banks not really taking care of existing clients, and we're finding a lot of refinancing. And when you refinance, there are fees to actually get out of that bank. And generally it's a discharge fee, so a $350 discharge fee, and then a few other government costs, depending on the bank. But there are banks at the moment that are offering cash back to refinance. So
Yep.
generally covers the fee, helps you put you in a better position.
So the thing is to
seeing a lot of
ask the question, isn't it? If you take anything away from today, if you're an existing mortgagee, ask the
Reach out.
question
Yeah.
of your broker.
Yeah, or
Yeah.
the person you did it for the first time, or I tell my clients they can ring themselves direct. But what you talk about secrets is, if a client rings themselves and speak to the bank and says, "Oh, my rate's 5%, it should be cheaper," the bank will offer them a discount, and the client might think, "Oh, great, thank you," but the rate they offer could be higher than what the market is offering.
Oh, really?
So-
So all this talk about people picking up the phone and talking to the banks, they really need to go through a broker. They really
should.
need you guys
They
to
should.
fight for them because
Unless they know the rates out there and they're good negotiators,
Yep.
you won't get the best deal, or won't be aware. So you might be prepared to pay a little more to stay with your own bank because you like them and it's easy and it's convenient, which is fine. But if you're aware that what that gap is, then you can make a better decision.
Yeah, and talking about money and money working for you, those rates and difference in rates over the course of the loan or over a period, it adds up to a lot of money. You know, so be smart and ask the questions, and you're going to save yourself in the long run, aren't you?
Yeah, well, that's an easy one that everyone should be doing. So we tell our clients just keep in touch. Once a year, review it. It's a bit like insurance premiums on building, and you find that when you rank and check it against another insurance company, it's actually higher, and then you rank them, they'll drop the premium. So
But isn't insurance, isn't that a completely different beast at the moment, whereas you don't have a choice? I was listening to something the other day, we were talking about all the flooding and all the stuff that's going on, that insurance companies actually rate you on not the street, but the number in the street. So if you're in a street down here and you're prone to flooding and the house is higher on the hill, less prone to flooding, completely different insurance premiums.
Yeah.
And then, or maybe they won't insure you.
Yeah,
Like
yeah.
some companies go, no, you're at 65 Wickham Street or whatever. We're not going to insure you because you're a flood risk.
yeah, I think in Queensland it's probably a lot like that.
So I think another top tip for today would be check where you're buying. Is it on a floodplain?
Yeah, building inspectors would generally pick up that sort of stuff. You mentioned getting a building inspector, so I've seen it before where they'll pick up it needs restumping, or it's got mould, or it's got water damage. So that they should pick that stuff up. And if you're spending $1 million, to spend $500 on a building inspection makes sense to
Well,
me.
it's nothing. As you say, like if there's been historical floods and it's only happening any 50 years, you know, and you're buying a property that there hasn't been a flood for the last 40 years. I mean, you're not even going to think about it, are you? So I think that's probably it's got to be on the list of things to tick off, doesn't it?
That's the thing about it. But even the recent floods in Melbourne, that was, some certain areas around the Maribyrnong River, they were flooding. And then we had
Yeah,
banks.
why was that? Why was that, Ted? Was that something to do with the racing club?
Yes.
Hey?
Apparently they put a wall up that diverted the water different directions, and the council passed it 20 years ago when a lot of people said this could happen.
Yeah. I think there was one guy in particular that was blue in the face, saying it's not going to work, and then it's 20 years later it's happened. So those people in those houses, I don't know much about insurance. Is flood insurance, is that standard? Is that part and parcel, or is that up and above?
It's timely with insurance, because we see it now that occasionally the bank will ask for flood insurance on a policy, whereas in the past it just gives you insurance and we'd give it to the bank and they're all good. But now they're actually, if the valuer makes notes in his valuation around it's in a floodplain, they'll ask.
Yeah.
And I even had a credit officer ask me if the property that they're taking as a security been affected by the Melbourne floods recently.
Oh, really?
Yeah.
Had it?
It didn't. But it's interesting that they're asking the question. that they're really trying to look out for those securities as well.
They're covering their
Yes,
asses.
they really are.
There's and
Things
that's
change just
and
like
that's
that.
one
Yeah.
guy's job is to make sure that everybody's asses are covered. It's like, that's what you got to do these
And we
days.
see it in high rise. Certain banks won't lend more in the building because they're overexposed. You know, if you're talking about first home buyers, you know, just a general getting the right properties, look for some land and try and avoid the high rise. Great lifestyle. Lived in Secura Road. I love the area, but in terms of adding value down the track, you're not getting a lot of capital growth. Good for rentals, but yes, I get a lot of clients that want that nice new townhouse, and I've passed on to buyers if it's bought them an older house further out or bigger land, and later on they're happy they did that.
Yep.
But yeah, I like just buying that nice apartment or nice unit, and they should be looking past that.
Is Melbourne CBD flooded with apartments?
Certain areas are, and then the banks will limit the lending. So Docklands, St Kilda
South
Road City, probably more Docklands City with the two.
Docklands is just dead.
How long have you
Isn't it?
been in Melbourne?
20 years.
Yeah, I'm the same, 20 years. And I remember looking at apartments and I had my clients buying there for 600,000 20 years ago.
Yeah.
And now they're 650 or 700.
Oh man.
And if you had bought two houses in Noble Park for 300,
that's right.
they're worth 800 each now.
But that could have gone either way. I mean, Docklands. I mean, when you think about it, it's next to the water. You've got a marina. It's by the city. You've got a stadium there. It's got all these ingredients that make it a potentially great little spot.
Great lifestyle, but the principles of capital growth and property values, there's got to be some land in there. And so if your goal is a great lifestyle, close to the city, close to, it's great. But if your goal is an investment, most people, their property is an investment for them.
Yeah.
They can rent there and buy the house,
Yeah,
or
exactly.
buy something with the parcel of land with it. So
Well, our neighbours have sold up from the suburbs and come into St Kilda.
Yeah, right.
You know? So there's a lot of people doing a lot of things for different
Yeah,
reasons. But that's why you guys are always going to be in business, aren't you?
or keeping us busy, yeah, definitely.
Yeah, everyone's just changing.
We're struggling to keep up, but
So the outlook for you guys, you sit down at your meeting on Monday morning. What's the outlook for you guys? What are you projecting? What's the talk around the office? Is it
well, fixed rates and rate movements is what all our clients are calling us for. So that's a lot of the conversation. So we're expecting, we go to professional development days from the banks, have economists there telling us about the future. And if people do look at the 4 and 5 year fixed rates, they're not horrendous. So they're sort of in that 5.5%, 6%, and rates are now sort of close to 5%. So they're not expecting doom and gloom. But a period of stability might get some confidence back.
Yep.
And yeah, we're trying to pass that message that people don't need to rush to buy, but they shouldn't probably wait for a crash. But if they're buying short term, be careful. But long term, they should be fine.
The Melbourne market has stagnated, hasn't it? It's gone back a little bit.
Yeah, I think it's 10, 15%. Well, that was always the forecast, but I think it's probably hit about 10. I'm not sure the exact numbers, but
Yeah, it's also dependent on certain areas. I think these statistics online, they do a general number, but if you look at little pockets, it changes a little bit.
Well, that's definitely if you're trying to get in the market, you do your research, like anything else. So new home buyers should be looking at anything and everything, and keeping their options open, thinking, as you say, long term. You know, because they don't want to borrow too much and get themselves in the shit. Well, technically they can't, as you've just said.
it's harder to, yeah.
Yeah, exactly. So and just buying smart, and that's what you guys are there for, and helping them into their homes. So that's good to know that the outlook's not as shitty as what I first thought at the start of this podcast. 7 rate
good
rises
help.
in 7 months. So you're saying that people shouldn't be scared, shouldn't be worried, should just bunker down a little bit.
Keep an eye on the pulse. I think the prices are holding because there's a little bit of lack of stock. So there's a lot of people thinking, oh, wait, before they sell, let's see what's going to happen.
Yep.
Normally happens before an election, but now because of all the news and inflation and rate rises, a lot of people are waiting and seeing, and that's why you don't see a lot of properties on the market, and that's helping a little bit on the price. There's still people that need to buy,
Yep.
but lack of stock. But I think, early to mid next year, you'll see a period of stability, and then you might see things happening again. All we can do is get our clients prepared and ready to buy and ready to buy something they can afford. But there's some general stuff they should be doing and buying within their means, but they can get excited with what agents do. They're very good.
Exactly. We've got another rate rise coming.
Probably.
Yeah.
The talk pre the inflation figures was February, and there's not normally one in December because it's an unpopular rise before Christmas.
I can see why.
The Reserve Bank don't meet January, but there's possibly one in a couple of weeks, when it's early December, and then one February, and then they're talking a period of nothing for close on a year, and maybe a little drop, but sitting around that sort of 5.5.
Okay, I was just going to say to you, that's the cash rate.
Yeah, well, cash rates 3 point
around 4.
So home loan rates now around 4 3/4. So we're probably expecting another 0.5% over the next 6 months.
Yeah.
It's not going to hurt too much more considering what we've.
Well, some people push over the edge, so those people should be preparing. I tell my clients now they're buying and borrowing at 4.5, 4 3/4. And prepare for 5.5. But if it doesn't get there, great. But you got to be there. And if you are borrowing to your limit, that's when you're looking at fixing. You can get fixed rates still slightly under 5 and some just over 5, depending how long you want it.
Yeah. Talking about fixed rates, I just want to go back to interest only. Interest and
P&I,
yeah,
principal interest. Yeah.
How easy is it to switch from one to the other?
Easy to go from interest only to P&I.
Yep.
So you've got a lower payment, you want to pay more. The banks are fine with that.
Yep.
But going the other way, it's a full assessment, and we can't press the button and switch it. You need to. Effectively, what you're saying to the bank is, I'm going to pay it off in a shorter period of time because you're going to pay nothing for a period of time.
Yep.
And you've got the same amount of debt for the remaining term. So they're checking you can afford that higher commitment post interest only.
Okay.
So it's an assessment.
Is there a minimum amount for the time they had to go for interest only?
No, it's 1 to 5 years generally.
Yeah. Okay.
And a reset or reassess at the end of that period. Yeah. It rolls out to P&I principal interest after the interest only period automatically.
Okay. So if anybody's having a little bit of mortgage stress at the moment, is it a good way to go? Is it?
Or it's a short-term fix. But if you're having stress, depending on what the reason is, the bank probably won't give you the interest only. They do have their departments that handle people having financial hardship, so they will give you a break. And I say to my clients to, swallow your pride and give us a call if something's going wrong. And the bank are pretty good with it. Yeah. They will give you a breather, but they also want a plan, and they want you to stick to it. So
okay, so
head in the sand doesn't work. But
give me a scenario if I've got a little bit of mortgage stress. Call you.
Yeah. Well, this happened at the start of COVID, so we had all these calls. Yep. Hang on, what's going on? I've lost my job, or I'm not working.
Yep.
So we'd ring the bank, and they would generally give you 3 to 6 months, either of an interest only payment.
Yep.
And that's just a temporary.
Yep.
Or they would give you a complete break, as long as you had a plan, and your plan could be to sell. It could be that you're getting some money from somewhere else. If you're just out of work, you're hoping you got a buffer, but some people don't, and they will give you a break.
Okay.
So it's to pick up the phone and talk.
Yep.
And then once you do make a plan, try and stick to it.
So the options are there.
Yeah, yep. Definitely. And because of COVID, they've had experience,
yep.
and they did it in grand scale through COVID.
Yep.
I would imagine they buffered up those departments massively, and there's special teams in the bank to handle that.
Yeah, generally you find when you're turning from or getting an interest-only loan, general loans are 30-year. Let's say if it's a 30-year loan term, if you do a 2-year interest-only term, they assess the application on 28 years.
Yep.
So meaning that you're having to pay off the principal in a less shorter time. So your borrowing capacity drops a little bit. So we find it a little bit harder if they're already struggling and we have to turn from principal to interest-only and going through that process.
Yeah.
But in anything, having a chat with us, it always helps. Yeah.
I think through GFC, there was a lot of interest-only lending, and that's in the US where people were coming off those honeymoon rates and then they couldn't afford it.
Yeah.
So the government got on the front foot, I think it's about 4 or 5 years ago now, and said they needed to cut back that interest-only lending. So for investment, it's quite normal, but it's pretty hard to get interest-only for a home loan now.
I was going to say, there's really no point, is there? And the thing is that if you do an interest only for the first couple of years, you'd want to do that because maybe you don't have the income stream to be able to repay.
Which is not a good reason.
Which is exactly you shouldn't have the loan in the first place. So but as you say, with investment property and it's a good way to go if you want to negative gear something or you want to.
Yeah, there's a handful of people that are buying a home, but that's going to become an investment. That's possibly a reason. It could be that one partner's on leave, like a mat leave or something, that, yeah, you can explain it. But in general, home loans, you don't do interest only anymore, whereas it wasn't unusual to do it 5-6 years ago. But the GFC taught some lessons offshore that...
Oh, definitely. Yeah. That was a disaster waiting to happen, wasn't it?
Yeah, we weren't really too affected here.
Yeah.
They're talking similar with these fixed rates coming off, that a similar sort of effect, but...
Nah.
I think the buffers that Nick was talking about earlier that have got people prepared, but there's cases where things happen to people, and that's where the financial hardship. Pick up the phone. Don't be scared to ring someone.
Yeah, good advice. Good advice. I think we've covered a few bases here today, lads. I think we've done enough. What do you reckon?
Yeah, well,
We've tried to
trying
make
to keep it
finance fun.
Yeah,
We're trying to make finance fun, aren't
not
we?
make it so boring.
Look, I think,
works well.
I think from our listeners and viewers' point of view, they just want to take a few things away and say, hey, I didn't know that, or give you guys a call, pick up the phone, get some advice, talk to one of you guys if they're looking at buying, or they're looking at refinancing. I know you guys are busy. We don't want to flood the phones, but I think
We'll come back and let you know. You can give us a hand.
yeah, sure. Yeah, I'll just sell up what I'm doing. I'll come make coffee for you guys. How's that? Well, once again, look, I thank you very much for coming down.
Thank you.
I hope you enjoyed the experience.
Yes, definitely.
Definitely.
It's fun, isn't it?
Yeah.
Yeah, it's different.
It is very different.
Yeah.
Yeah, I think. Oh, I just wanted to add that I think like coming into this, it's so nerve wracking with all the mics and everything. But once you really get into it, it's a really fun conversation.
Well, the idea and the concept that I'm trying to do here is that we just sit down and have a chat.
That's right.
Yeah, but we want to cover stuff that our listeners are going to be interested in. We want them to go, I didn't know that, or maybe I should do that. And I think today we've covered that. As I said, trying to make finance fun. I'll say that for the 5th time. So that we might make some T-shirts and get them in the merch store downstairs. But it's guys sitting down having a chat, and something's going to come of it, and somebody's going to benefit from it. So once again, thank you very much, guys. I appreciate it. I do hope you do come back later on down the track and we make finance fun again.
We'll try a bit harder, maybe a bit of preparation.
We tell some, experiences, stories, and
exactly.
That really helps too.
You try not to prepare too much here, because as I said, we just want to have a chit chat, and I think that's what we've done today. We've done a good job. So thank you very much. I appreciate it.
Thank you.
Thanks, Randy.
Cheers, guys. That's a wrap, Mav.
Yeah, thank you for tuning in and for your time. You know the vibe, I'm steady living until I die. It's a loose state of mind, and we showed you that. Keep it authentic and real, I hope you coming back. Hey, make sure that you subscribe, cause we got it popping all the time, and it's going down. If you wanna elevate, wanna live a better life, keep it locked here. You know it's a loose state of mind, let's go.